Great governance. That's a big topic, especially for nonprofits, and great to have you here with us. I'm Peter Pasuti, and I lead Gallagher's global nonprofit charities work and support our consultants around the world. We talk about best practices and all kinds of other elements of governance that are very important. But today, we'd like to talk a little bit about that very magical D&O coverage, if you will, and what goes with that. And joining me to do that is our national subject matter expert, Taylor Feeney, who for 10 years now has been a leader in Gallagher's executive and financial risk practice, and is here to join us and talk about some of the tailoring and the manuscripting and the nuances of the nonprofit D&O coverage. Taylor?
Thank you, Peter.
Okay, let's get right into it then. We have two big questions, and we've got an intentional order to them. The first, Taylor, relates to how should a board and the executive team identify, quantify, prioritize, and address risk to the nonprofit organization?
Yeah, I mean, nonprofit organizations face a variety of risks that can impact their ability to fulfill their mission and serve their communities. So, to effectively manage these risks, nonprofit boards and executive teams must adopt a formal risk management framework. And this structured approach ensures that risks are systematically identified, quantified, prioritized, and addressed, which will enable the organization to operate with resilience and confidence. So, in order to create this framework, the board of directors should begin by identifying potential risks across all areas of their operation, which could include the operational risks, such as day-to-day activities, financial risks, such as financial mismanagement or risks related to funding, reputational risks, especially those that could cause harm to the organization's public image, compliance risks related to legal or regulatory requirements. There are certain tax laws, employment laws, and specific nonprofit regulations. Strategic risks that could impact long-term goals, and even external risks, such as an impact of a pandemic or political changes. So once those risks are identified, boards then need to quantify the risk by assessing their potential impact and likelihood of the risk occurring. So you should be asking yourself, what is the severity of the consequence if this risk occurs? And what is the likelihood or probability of the risk occurring? So it's important to evaluate these based on historical data, trends, and even getting expert opinions. And not all risks will acquire immediate attention, but there will be others that will be more urgent. So it's important for organizations to then prioritize the risk based on the severity of the impact and the likelihood of the risk occurring.
So I assume, Taylor, that that then sets the framework ultimately for the transfer of risk, for the protection of the organization based on those proactive, if you will, defense mechanisms. And so let's talk about directors and officers coverage for nonprofit boards and for the executives, actually, for the full team, and in terms of what should be considered. It seems to be a very broad word. D&O is the acronym, right? But let's get into it a little bit in terms of some of the side coverages, et cetera, that really need to be, and again, depending on the complexity of the nonprofit, and again, this assessment that's done. Go ahead, Taylor.
Yeah. So once you've identified the risk and you can evaluate, do I want to transfer this risk, avoid the risk? Is it a risk that we just have to take on? But if we want to transfer it to an insurance policy, that's really when the D&O policy comes into place. And those are critical for nonprofit boards. So that protects the individuals serving as board members, directors, officers, or the organization itself from claims arising from decisions and actions taken in their official capacity. So whether or not you did something wrong, somebody sues you, you need to be able to defend yourself. And so there are three sides to a D&O policy, and it's important for boards and organizations to fully understand this. So side A is the first side. There's side A, side B, and side C. But side A is for non-indemnified individuals. As a board member, you want to make sure the organization is indemnifying you. And if there are no funds left to indemnify, or legally they are unable to indemnify, then the Side A policy would respond. So without the Side A coverage, you will be held personally responsible for these costs. This is really personal protection for you as an individual. Then there's Side B coverage, which provides coverage for indemnified individuals. So that means the organization is responsible for indemnifying you in the event of a claim, but the insurance basically reimbursed the organization for those costs. So it helps protect the balance sheet of the organization. And then Side C coverage provides coverage for the entity itself. So if the organization is named in the lawsuit, this then would then cover the cost there and take it away from the organization's balance sheet. So D&O policies are complex. Every single one is different. It's important that you're aware of, what coverages are you purchasing? Do you have adequate limits? Are there certain exclusions that are being added that should not be added to the policy?
Outstanding, Taylor. What I really like about the emphasis here and the order of our discussion, starting with the assessment and the risk and understanding that risk before we go to the insurance market and try to get the right set of terms and conditions to match that preparedness, that assessment. So thanks again, Taylor. We're grateful to have you supporting our thousands of brokers, consultants that are working with third sector clients actually all over the world.
Thank you.